This is the Scrap Metal Commodities Recycling Report by BENLEE and Raleigh Goldsboro Recycling, November 28, 2016. Last week, most commodity prices rose and Wall Street hit new highs for the third week in a row. U.S. steel production rose slightly, and unlike last year, production may rise through the end of the year as we hear steel mill order books are rising. This is unlike last year when production fell for the last 5 months of the year. Oil rose about 1% last week to $48 a barrel as OPEC and Russia continue to talk about cutting production to get prices up. But there's been no action. Yet OPEC is meeting this week and it could bring changes. Current low gasoline and heating prices will be great for holiday spending and support commodity prices. The oil rig count continues its slow rise, going up 3 to 474, which is up a huge 50% from earlier in the year. But looking at the chart, we see the rig count is really down an enormous 70% from 2 years ago, when there were 1,609 rigs. Jobs and steel use in rigs are better, but still greatly depressed. Iron ore ended Thursday at $78 a metric ton, up 13% from the Wednesday before, up 31% from in the past month, and up an even bigger 68% in the past year, which has helped putting upward pressure on scrap metal and finished steel prices. As an example, last week Dow announced an increase on merchant bar of $50 a ton, which is $250 per hundred. U.S. scrap ferrous prices remain higher, and pressure continues building for higher December prices, which could be up well in excess of $20 gross ton, as seen by the $50 per metric ton increase in finished goods steel that we just talked about. Stainless scrap 304 rose to 33 cents as prices continue to rise for most commodities. Copper rose a huge 12 cents to $2.68 a pound, the highest in about 17 months. Remember, while this increase is real, it's mostly based on speculation, not increased demand. So actual selling and buying prices are up about 10 cents less than the actual prices in the past month. If global demand rises, prices will stay where they are or could go higher, which no one forecast even a month ago. Related, copper inventories have been falling in recent months, helping keep the upward pressure on prices. Aluminum rose 3 cents to 80 cents, now up about 20% for the year on nice increases in demand, combined with increased production costs that are being passed along to buyers and, of course, sellers of scrap metal. Aluminum inventories stabilized at about 8-year lows, which will continue to put upward pressure on those prices. Consumer sentiment, how people feel about the economy, is a major U.S. economic indicator. The November reading of 93.8 was the highest since May, and again could mean a solid holiday season for spending, which will support even higher commodity prices. Another major economic indicator is the Manufacturing Purchasing Managers Index, PMI, which was 53.9 in November, the highest reading in over a year. Greater than 50 is growth, so manufacturing remains very positive. Wall Street hit new highs for the third week in a row as many look for faster U.S. growth. The Dow Jones Index is now up about 5% for the month and almost 8% for the past year. A lot of very positive news in the past few months could lead to higher commodity prices going forward. With all looking positive, our BENLEE team is working to clear out our inventory of roll-off trailers and open-top gondola trailers by year-end. Call out Jeff Dietrich for year-end discounts and get your full year 2016 depreciation write-off. With that, we hope all have a safe and profitable week.